Okay, so we've run through a fair bit today. We've had Jamie do a history update on Bitcoins. Patrick came and talked about the technical analysis. How did you go with that? Trading is really good, especially when you get to, if you've done trading before. I find it fascinating actually looking at the charts. And he's told you which charts to aim for. Don't look at the 1 minute or the 5 minute, right? You know, go for the 4 hour or the weekly charts. But if you want to actually open an account, I think Jamie ran through this before, but you go to bxe.com.au or 21st Century Bitcoin Exchange, but bxe.com.au, and you go to the Getting Started button, and then we just scroll down. Now, you can buy the Bitcoins from us. We do charge a commission on that, but you just follow these simple instructions, download it from these links here, set up your e-wallet, and then you can just deposit, or you can just fill out a form and give it to us. Now, what we do is we will buy it at the rate, as close to the rate of the day, and as soon as emails come in, you know, you can obviously buy it through us. Now, or you can go online and do it yourself. Now, the thing is what you do get with 21st Century is the fact that we support you and follow it up. So if it's moving at such a fast rate, and you ring up and say, I want it now, we're not a brokerage, so understand that. So if we're doing it a couple of times a day, that's fine. But the idea is, remember, just to buy a couple of Bitcoins, hold on to it for the long haul. We're not day trading this. Effectively, like Patrick's a day trader and others are day traders. So you can go into here, you set it up, you set up your e-wallet where you get a big tracking code. Some of you may have already done this already, or you can just fill out the form and we'll buy it on your behalf and monitor it. So, you know, like Jamie's mentioned that I think he bought it at 400, went up to 1200. So you got the opportunity to sell it and make that profit on there, or just sit on it and only use a small percentage of your portfolio to do that. But if you go onto the website, it's very self-explanatory. If you get stuck, just give us a buzz on this. The other thing is perhaps maybe did you guys discuss the wallet? So what I'll do is I'm going to bring on Katrik. Katrik Gupta is, many of you have met him before. He's a senior financial analyst of the group. He's a chartered accountant. He manages the US property division as well. Now, the good thing about Katrik is that he's a number cruncher. He's all over it. So he'll be able to, we'll ask some questions. And if you guys have got any questions about setting up the account, Katrik has done this before, so we could probably run through the wallet with Katrik. So, hey Katrik,
Yep.
How are you?
I'm good, thanks. How are you?
So you want to just talk about the wallet?
Yes, so basically what you do is before you buy a Bitcoin, it's like a bank. When you need to deposit the money in your bank account, you need to have a bank account. So Bitcoin e-wallet is like your bank account, but because you're not dealing with the banks, you need to set up an e-wallet. Now, there are different vendors who provide wallet services. So it's as simple as just like setting up a bank account. You go to start a new wallet, click on that option, and it'll ask you basic questions, and you just fill in your details and all the your date of birth and all those things, and basically you'll be able to set up your new wallet. So it's as simple as that, setting up a new account so you can start receiving your payment. Now, every wallet will have a specific address. And what people do is, like, if you're buying, let's say, Bitcoin's worth $100,000, it's recommended that you're not putting all your Bitcoins in one wallet, because it's kind of prone to risk of getting hacked. So if your Bitcoins are diversified over like 10 different wallets, so if something happens to your one wallet, at least your other 9 wallets are secure. So it's like email account. If you've got 5 email accounts and 4 of them are secure and 1 of them is hacked, so you get the security of the other 4. So that's what the concept is. And most of the people, I've given you this sheet. Now, what this is basically the basic research document which the founder of Bitcoin submitted before the currency started. So, and I'll show you how you can find, whatever research you want to do, you can find everything online. You can do research up to whatever level of detail you want. So this is a draft paper which was submitted by Satoshi Nakamoto. You even have his email address. So if you want to just send him a random query. He might reply to you. So what I'll do is I'll switch over to my presentation now, and I'll quickly run through a couple of like historical data. I'll show you how you can access this kind of information, and like it's readily available. It's public record, and you can find any information, whatever you need, if you're really keen into kind of getting deep into the topic, because that's how like my role is to analyze things as and when any new opportunity comes up. Like I brainstorm things with Jamie. So when we started talking about Bitcoin, obviously I have to do research. So first thing is Google Bitcoin. It takes you to Wikipedia. Quickly scroll through. I was able to find this on Wikipedia. Like, wow. And I'll show you where it is. And like you'll be amazed to see the level of detail which is available online. So Dan, can you please?
Yeah, we'll just finally
Yeah.
60 seconds. It's just frozen again.
No, that's fine. Yep.
Then with the e-wallets, and I read some of the material from 21st Century about there was Bitcoin QT, which
Yep.
was that like another wallet you could
That's a passcode. Like here, you need to have a passcode for obviously your Bitcoin when you buy it, and you need to have an e-wallet. So there are multiple codes.
Yeah.
Yeah. So for every wallet, there'll be a different passkey, because if you obviously give your e-wallet address to someone to transfer the Bitcoin, and if that's the only thing, then basically like, yeah, they'll know where your money is stored.
Yeah.
So you need to have a passkey to kind of unlock that. So that's how it works. And it would be obviously detailed in your book. When you go through the book, like you'll find all those details, and when you're purchasing it. So my background, like I'm a chartered accountant by profession. I've been working in accounts for last 10 years now. I've been with 21st Century for five and a half years. And my main role is for US division, but I'm also actively involved in any new projects we start, or if we have to do research or analysis on any new projects we take over. So what I'll do is we'll quickly go through. Now this is Wikipedia. Okay, so what I did was I went to Google and searched for Bitcoin. Okay, so I got pretty much everything about it. It tells you date of introduction and everything, and I kind of kept on scrolling. I just wanted to see why and like who started it and what were the basics. So if you see there, like Bitcoin, a peer-to-peer electronic cash system, the original paper on Bitcoin by Satoshi Nakamoto. And this is what you have right now. So click on that, and it'll open the document for you. And if you're really keen on some topic, I think these kind of things do help, because you know exactly the background of what you're reading on, and you'll try and understand the logic. Like now, after reading through this system, you understand that okay, it's a cryptocurrency. The intent behind introducing this currency is they were fed up of the delays or the time it takes to transfer from one country to the other, or like international transfers. Like now, one of our friends here, Cameron, he has purchased a property, so he'll be sending money to US. He'll have to set up a FX account, transfer the money to FX. From there, it goes to the title company. It takes a couple of days. They'll charge, obviously, he'll lose some money on currency fluctuation. They'll charge some spread and all those kind of things. There'll be transaction fee. But Bitcoin, if you have a Bitcoin, we have Bitcoin wallet, we eliminate all those steps. So that's what the intention was, to eliminate those things, to speed up process. And nowadays, like the world economy, it's like one big global economy, and everyone is trading with everyone, and they want that speed, like they want the money instantly. So that's the main logic. But obviously these IT geeks, they've done some like random programming, and they think that okay, there are 21 million Bitcoins up till date. They have introduced around 12.9 or something, 12.9 million. And there's a process of mining them. Initially, it used to be 5 cents when it started back in like 2009 or 10. Like it started from 1 cent, but the real trading started from 2010, July 10. It used to be 5 cents, and I'll show you some really crazy examples on how we analyze the historical data. And I think it's good fun for you guys as well. Now, what I've done is I've downloaded this data from a site called Bitcoin Charts. Okay. So what you do here is like Katrik would have already gone through different charts on how you read charts and how you study them. So in this particular example, what we are doing is on this website, you can see all these charts, okay? And now you also have an option here which says load raw data, okay? So what you do is, depending upon what time period you need the data for, I need the data for last 4 years, okay? But I need to see exactly like from where it started. So I need the data for 4 years, and I need a weekly data. Like I don't want to monitor or track it like hourly because it'll be crazy. So I need it on a weekly basis. So I go there and I say, okay, draw me the graphs. And now I get the entire data from 12th of July 2010. The value of Bitcoin is highest point was 0.049, opened at 0.049. So that's like less than 5 cents, okay? And number of units traded on that date, so 20 units. So the value was only like $1 or 99 cents traded on that day. And if you scroll down, you'll see like as on end of last week, the opening price was 900, 928 high, lowest was 455, lot of fluctuation, and this is what I think Jamie was talking about, that it's highly, highly volatile. But the quantity is 247,000 units. Currency is like 1.6 billion or something. And that's within the time frame of like 4 years, 3.5 years. So imagine like they've done pretty big. And now it has come to a stage where Bitcoin has evolved as a controversial major currency, which can obviously, once it is able to overcome all these hurdles, which is the security threats, the complexity of the technical issues like setting up the wallets and internet security and all those things, the government regulation, the tax avoidance issues. So once it overcomes all those 4 issues, big major issues, the benefit of having this kind of digital currency is massive, and then the value in this kind of currency is massive. So what it means is the people who have invented it, now there is already like discussion at Federal Reserve, they do understand the benefits, but they also see the risks. So the people who have invented it will constantly, they'll kind of meet with those departments, they'll negotiate, they'll try and show them the value, they'll try and implement the systems to cover those risks. If the exchanges are unregulated over a period of time, they might introduce exchanges with particular license requirements. So that slowly and slowly it can be accepted as a global currency. If that happens, it will go up from 1,000 to 40,000 or 100,000. So it has that potential. But if none of those things happen, that means obviously anyone who has invested money so far, the returns would be obviously, the value will drop, and the value will be nothing or negligible. But still we can see that these guys are definitely up to something. They've started from 5 cents, they've gone up to 1,200, and they obviously they won't lose all their fortune for nothing. Like they'll definitely try and do something. So now all this data, what I've done is I've taken this data, I've copied it on an Excel sheet, because that's what I do, like I analyze data. So I'll quickly show you some really interesting analysis which we have done on that report. So maybe, can I have someone's, like let's pick up an example. If you invested $10,000 on your birthday in 2010. So just give me your birthday, any one of you. Cameron, what's your date of birth?
13th of February.
Okay, so we'll take in 2011 in this case, okay? So 13th of Feb 2011. So that's this week, okay? Row number 34. So the value of currency on that day was, average price was 96 cents, okay? So what it means is if you invested $10,000, you would have purchased around 10,417 Bitcoins on that day at 96 cents, which would have been worth $7.4 million at today's price. Because I'll quickly double check. So 10,400 times the current rate is 710. So yep, it's $7.4 million. So anyone else? What's your birthday? Huh? When is your birthday?
Oh, I passed.
Oh, you'll pass that question. When is your birthday?
13th of the 3rd.
13th of March?
Yep.
Okay, so 13th of March.
Maybe up to
Yeah. So that's this column.
But I would regret that I didn't buy back then.
So 13th of March, the currency was like, the value was 8.81. So you're better off. You would have been worth 8.7 million. Okay. And that's in 2011. Let's go to 2012. So we'll look in. So Feb 2012 is column number 86. Okay. So on this day, the value was 4.72. Okay. You still would have made 10,000 into 1.5 mils. So that's pretty good. Let's go to 2013. There you go. So this week. So on that day, the value of Bitcoin was 28.51. So you would have purchased around 351 Bitcoins, and they would have been worth $250,000. Okay, so that's like only like 25 times. So what we obviously like, the reason why I've shown you these charts is like when you are analyzing something or when you're doing your numbers, you need to obviously try and get to the source and try and extract or see the entire picture in front of you and then analyze the data, because that helps you kind of see, okay, this is how it's trending. Now, another important thing which I noticed was, now this data goes on for 180 weeks, okay? So I wanted to see what has been the trend week over week in terms of whether the currency price is going up or whether it's going down, okay? So we've plotted that on this table. And basically what we see is it's been around 179 or 180 weeks since then. So 0 to 5% increase from the previous week prices, it has happened 56 times. So 5 to 25% increase, it has happened 53 times in last 3.5 years. 25 to 50% increase had happened 15 times. More than 50% increase did happen 8 times. 0 to 10% decrease, yes, this also has happened, and it has happened 24 times. 10 to 30% decline, 22. More than 30% once. And in 2013, until I'll say mid of December or like 10th of December, we were having most of the weeks, every week the price was just going up. And what we'll do is we'll quickly go through the weekly prices in last couple of weeks. So if you see from here, let's say from 1st of July, so the price of Bitcoin was, average weighted price was 79.8, and then there's an increase, so from there it went to 84, 94, 94, 103, 104, 110, 119, 132. So every week it is increasing gradually. Okay, so that's a really good and a very nice strong trend. And if someone caught this trend, like basically you end up making 5, 10, 15, 20% every week. Okay, so it kept on increasing, and it has a historical record that out of like 180 weeks, it has kind of gone up in value for 132 weeks. And then 48 weeks, it has gone down from previous week's prices, but it can go crazy when it keeps on going down week after week, and I'll show you how it happens. So let's say, for example, 3 weeks ago it was 1200, it went down to 1000, so obviously it's lost 20% value, then it went to 800, it again lost like approximately 20% value, and now it's 800, and then it again went down to 600. So it's constantly a decreasing value, so it's lost 50% value within a matter of 3 weeks. So it does happen, but obviously it goes down to like, as long as all those risk factors are covered, and if there's a like really big agreement or a couple of regulations happening, then this thing can go really big. But if obviously all those things kind of slowly die down, then it's a risky currency. But entering into at the right point of time, whenever you see that it's worth like at a good dollar value, like just buy some and then sit on them, and whenever you see the price going up, sell maybe one. Like if I have to buy, like when I buy, I've got 4 in US I've purchased, and my strategy is, let's say for example my entry price was 800, so 800 into 4 Bitcoins is $3,200. Okay, So what I'll do is when this Bitcoin goes up to $3,200, I'll sell one. So that I'm just sitting on 3 Bitcoins and that's all profit. Why? Because I know this is a speculative strategy, and Bitcoin can lose its value from 800 and it can go down to $8 anytime. It may not happen, but still you never know. And I don't want to be in that situation. So I'll buy 4 for 800. My total investment is 32. Whenever it touches 3,200, I'll sell one and I'm done and dusted. Then I'm not worried about what's happening. And then I've got all my 3 Bitcoins sitting in profit and I'm laughing. So when it went down to $500, I would have said, wow, okay, let's go there and let's buy 10. Because the price has gone down massively, consistently over like 3-4 weeks. Like in this year, total number of times the value has declined is only 9. And out of that 9 times, 3 times has been in last 4 weeks. So if we ended up buying, and it's really difficult when it goes down to 500, 550 range, because the total number of people who are trading Bitcoins is less than 250,000, and there are not too many sellers there. And then the number of exchanges who are selling Bitcoins are really limited because it's not regulated. So they are trying to work around the system. They're trying to get access to Bitcoins. But like I've had a case where one of my friends in US, he buys Bitcoins not through an exchange, but just like by meeting someone in person. So if you have Bitcoins, we'll do a deal on phone. We'll say, okay, we'll catch up at this time and I'll take Bitcoins from you. So whenever Bitcoin goes below like 800 or 900 level, you refuse to sell. You'll say, hey, I'm not interested to sell it. So even if the price is that, nobody is willing to sell because they think that it will go up to $100,000. So there might be 250,000 people who want to sell or who are trading on Bitcoins, but out of that, 100 or 150,000 people are those who are long-term holders. They don't want to sell. So there's only a small fraction of people who are day traders, and then they trade only when they see that values are going up and they're making profits. So to buy them, it's really difficult. And for anyone to kind of be on a safe position, you need to buy at a good price, buy multiple, and whenever you see the price going up, sell the Bitcoins to recover your investment, and whatever you're sitting on is your profit. So that's how obviously you are 100% safe and you're not risking any money. And now after, let's say 2 years, this goes to $100,000, at least I will not cry or I won't repent because I've made $300,000 out of nothing. So, and I'm going with the trend. I'm just trying my luck in different new things which are happening. Okay. So this is the historical price. Now we'll quickly go to the chart and see the prices in last few weeks. So 132, it still keeps on going. So 135, 36, 37, 37, this is the decline. So there has been an increase for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 times. And then there's a decline. But you'll also see that it used to be 101, but there was a sharp decline there, to 79. And then it slowly and slowly went up to 140. And then again, like it declined once, but then after 129, it broke the resistance level. And immediately you'll see 169, 99, 208, 296, 384. So this is when it becomes interesting. November 2011. And now it's jumped to 648. Now we are talking dollars. 1007, 958. So right now it's obviously moving within that price range. So what will happen is obviously right now at this stage it has become a big deal. It's kind of come close to the value of gold. So now everyone, every government regulation or everyone is worried because there's no regulation. There's no like it's totally unanimous. Nobody knows who's transferring money to whom. And like you can avoid tax. So there are so many implications. So now the governments have started commenting. Initially, like China might have wanted to trade and make some money. They said, okay, it's all good and we'll accept Bitcoins. It led the Bitcoin's value to go up from 384 to 648 to 1,000. And then they said all the Bitcoin exchanges need to be regulated or like they are totally banned from China. And all of a sudden, it went down from 1,000 to 880 or 600. So obviously, it's right now it's totally dependent upon how the governments are going to react and what their policies would be around this thing. And if anything big happens, it will break these resistance levels and it will go up to 2,000, 2,500. And if those governments are able to overtake and kind of control the entire industry, then obviously this will eventually slowly die, like anything can happen. So historical charts and prices, they do help you analyze things. You can kind of learn a lot and you can make informed decisions. Most of the data is available online. Just play around. Wikipedia is a good source. Charts, understanding and playing with these numbers. So that is good. Now, quickly go back to my slides and we'll just discuss the key. Okay, so what are the main positives, or why are people attracted towards Bitcoins? It's because of the price volatility. We have seen that it goes from 500 to 700 in no time, and then it goes back. And there's a lot of opportunity to make profits from the price fluctuation. And we have seen that over a period of last 3.5, 4 years, there has been periodic, consistent rise in the value. So it rose from 5 cents to $10 in first year, from $10 to $100 in second year, from 100 to 1,000 in the third year. So that's why people are attracted, because it's one of the best forms of investment to multiply money at the quickest rate. Profit scope, huge potentials to make profits. So we have already seen that if you invested the money on your birthday in 2010, you would have had $130 million. It's a new currency and it kind of goes well with the new e-network, e-payments, all those kind of systems. If you're, most of the shoppings nowadays for youngsters or like businesses happens online, like you buy advertising online on Facebook, you purchase merchandise on Amazon. So all those things are happening and it's easy to transfer the payments just by press of a button. So have a e-wallet, have e-money, digital currency, and there's nothing real, so it's all virtual. The main reason, and as you go through the research paper, you'll try and obviously once you kind of go through this entire presentation, you'll understand after reading the research paper, all these things will make sense, because you'll see the basis of why it was formed. And one of the biggest intention was to eliminate the fee and charges which are involved in the traditional banking system, because we end up losing a lot of time, and also it costs us fortune of money just to transfer money from one place to the other. We have been in a situation where our clients are sending money to US, and then next day or the week after, we are bringing the money back to Australia, because we have to do it for accounting purposes, that we have to receive that money in America, but then for cash flow purposes, we might need money in Australia. And we are paying some charges when the money goes out, and then we are paying charges when the money comes in. And if it was digital currency, you pay for via Bitcoins, you bring the money via Bitcoins, it's instant, and like, hey, you make good money. You don't waste money on. But the challenge, or obviously the future outcome, if you look from an economist point of view, if this currency takes a massive position in future, even if it takes 10%, it's going to kill the banking industry. Because what does fee, and can you imagine life without banks? Like, if banks are not there, what will happen? The real estate will die. You know what I mean? Everything is interlinked. So obviously it's and that is what senior economists would be thinking, because okay, you want to kill the fees and charges. What it means is the bankers would be out of job, because they're not making $5 or $10 on ATM transactions. They are not making $5 or $10 on money transfers or international transactions. So banks are not making money. That means there's no employment on banks. If there's no employment in banks, that means people lose job. So from economist level, that will happen. But then on other end, you'll have another setups like Bitcoin exchanges, where you'll be paying the salaries and all those things. But if that happens, that means Bitcoin. They are saying that they want to avoid charges, but when they start hiring people, when they start regulating everything, when they have to go through processes, their cost will increase. So the cost of transaction on Bitcoin will increase. So they are being smart people. They are saying that yes, use the system, it will reduce the costs, it will reduce the fee, but eventually when it is widely accepted, banking will die and the new banking will emerge, which would be digital banking, and they'll have their own fee system and structures. So it's kind of really like, it's a vicious chain, and like one thing impacts the other, but like, hey, it just keeps on going. Very quick way of sending and transmitting payments. So that's, and it's a perfect example. If you buy property in America, it takes 2 or 3 days. You pay a lot of money, but you save all that. some people who've invested back in 2009 or 10, like there have been cases where a Norwegian man, he was going to buy a lunch. He ended up going online, and he thought that he saw this currency. He spent that $27 on buying bitcoins, and he's worth like $1.5 million, 1.5 million or something like that. So there was another guy who had 5,000 bitcoins in his hard drive back in 2010, and it was like he forgot about them, and back in June, July, they were worth like millions. And I think he had to go to the dumpster to recover them because he threw his hard drive. So it can be the next big currency if this replaces US dollar. People are kind of fed up of US dollar, but they are definitely reliant on it. So if this currency replaces US dollar, it will help all the other countries, but then it will have other major economic impacts. So, but still you shouldn't have all your wealth in bitcoins because that's very risky. But having 2, 3, 4, 5 bitcoins whenever you see the right price points, it might make a little bit of sense just to hedge and kind of benefit from this opportunity. It's limited in quantity, so there are 21 million bitcoins, and it's minted through complex computer programming, and obviously it's traded as a medium of exchange. So people do buy. In some cases, they purchase cars by using bitcoins, or I'm happy to accept a payment in Bitcoin if someone wants to buy a US property, because I know that the value is increasing. And what I'll do is, if Cameron has bitcoins, I'll be happy to take bitcoins for his property, because I'll take the bitcoins from him, I'll go and sell the bitcoins, and I'll just retain a small portion of bitcoins as my residual money. Like I'll just keep small profit portion into the bitcoins, because just in case it goes up in value, I have my money back. But it gives me some extra clients, as Jamie would have discussed, because it helps you in marketing. It's the most kind of hot topic, because anyone who sees that the value of something has gone up by 10 times in last 2 days, people talk, hey, have you heard about Bitcoin? Did you see he made double the money in one day? So people talk about it, they search, and if by searching you'll say, okay, search Bitcoins, and you'll see we sell properties, US properties in Bitcoins. So you'll automatically go to there. So it's good for businesses to attract a lot of a lot of attention from local people, and it's good for clients as well, because we give them flexibility, and we work with what's new in the market. Now let's talk about the risks. So these are the risk factors on bitcoins. Obviously, there's price volatility. You can buy there are people who have purchased for 1,200. It has gone down to 600. And if they are faint-hearted, they'll definitely sell. They'll be like, oh my God, I've lost 50%. I'll sell everything. So what I would do is I'll buy more when it goes to 600 to average my cost. Because I know, okay, it went down from 1,200 to 600. I'll buy at 600. So that when it goes to 900, I'll sell some, so that now my average cost is reduced to 900. Okay. So price volatility, but it's a good thing, because that creates the market. Like we need people who panic, because if everyone wants to just sit and hold, nobody's selling, and then the price is not moving. So that's really important. Unregulated exchanges and are not regulated by government level. So that's a really, really big thing. So obviously, once this bullet point is kind of fixed up, it will have a really good impact, because it would be a formal mode of currency which would be widely accepted, and it will have a lot of value. It does have value right now, but it's kind of volatile. Technical complications and making it difficult to understand, like half of the people don't even, they buy it, they go with the flow, but they don't even know what the heck they are doing, and it is complicated. It's not easy. And imagine one Bitcoin is worth $1,000. You go to Subway to buy a footlong for $8, how much would you pay? I don't know how many bitcoins will I pay, but I'll need an Excel sheet to calculate that. And here is my Excel sheet. So one Bitcoin is worth $1,000, and I have to make a payment for $20. So I'll be paying 0.02 bitcoins. And just in case we are bad in maths, we might end up paying 0.2 bitcoins. So we're paying $200 for it. Foot long. So from calculation point of view, in day-to-day life, we are used to paying $3 or $5 for milk or bread. So let's say we pay $3 for a bread, we'll be paying 0.003 bitcoins. how will you just foresee on all the subway like on all the Safeway shelves or Kohl's shelves, you have all the pricing in bitcoins. You'll be like, what am I buying? How much am I paying? Like you won't understand that. Like it'll take some time to adjust. So that means like to penetrate to that level, it would take a lot of time. And this is a technicality to when it goes to bigger level, but you never know. Like they might be able to. Okay. So market adoption, again, like some people are friendly, some are like negative about obviously all this entire concept. So it's not widely accepted, but still it's accepted. And I think it's more like it would be used as a medium for bigger transactions and kind of transfer, like avoiding a lot of bank fee and charges. So like if it's a $30,000 transaction, it makes sense, but for buying a bread, it doesn't make sense, kind of thing. Not traceable once transferred, so that's again like it's a good thing and a bad thing. Okay, once transferred, it cannot be reversed, so there's no merchant chargeback or stuff like that. It's prone to security risks and hacking. There have been cases where exchanges have been hacked and people lose all their bitcoins, and then they start making stories that this exchange never bought bitcoins for us. And they just kind of took money from us and said, okay, you've got these many bitcoins, and now they're saying that they've been hacked, so there's nothing there. And there are no controls. You cannot trace back and do all those kind of things. So there are risks like that. And then obviously tax treatment. So that's again an open case, and there are no certain rulings about this. And eventually over a period of time when the currency is frequently used, the tax rulings will kick in and things will be more regulated. So that's pretty much from my end, and I'll bring back Lou and Jamie. Okay, so Jamie will come in and he'll help us with other things. So basically you need to, whenever you are studying on some topic, you need to research a lot on Google, and like a lot of things are available on Wikipedia. Everyone throws whatever they know about the topic on Wikipedia, so that's a good resource. It's good to understand the historical prices, and obviously just stay safe and trade well. Good luck. Thank you.
Okay, let's take a couple of questions. I know you're busy buying Bitcoin. Raise your hand if you're excited about investing in Bitcoin. So obviously, who's found today of value? Who's learnt many certainly interesting things? And it's like any investment or anything you do, the more you learn, the more you have the potential to earn because you have more confidence. And investing really comes from having that inner certainty to act regardless of the external validation. Most people who are not successful investors is that they need all their friends, all their family, all the media saying, do it, do it, do it, before they feel validated to go and do something. Now, when everyone's doing that, that's when you do have a bubble in a market. Like the US property market was like that because everyone was doing it. I often talk about the taxi driver test. If your taxi driver has become a property developer part-time, time to sell your properties. Okay. If your taxi driver is giving you stock market tips, time to sell out. When your taxi driver starts telling you how many Bitcoins they've bought and made, maybe it's time to cash out a Bitcoin. Does that make sense? It's always a good test, because human psychology is that people need external validation because they don't know how to make a decision internally. Therefore, they're always going to be the last ones into something. And they're always going to make the wrong decisions. You need to be ahead of the trend or be what's called a contrarian investor. Warren Buffett is a contrarian investor. For instance, he's investing in newspapers at the moment when no one else largely will. Why? Because he has contrarian views. He sees value in distressed assets. We've been the same in our media companies. We've been buying print magazines because we have a contrarian view to the rest of the industry because we believe there's a future in them. Or we can buy them at a stress. So, but that you have to be able to generate, just like when Bitcoin might drop down, a lot of people freak out because the external validation is no longer there. Is that a time to panic, or is that a buying opportunity? You'll only know that if you have the internal certainty to be able to preempt the future. And that uncertainty comes from knowledge and psychology. The psychology to act and having the knowledge. By having more knowledge, you have almost like insider trading type benefit. Even though it's not insider trading, you have an advantage, competitive advantage to other people. So in saying that, I'll just hear what's been, maybe you want to share, we'll go around the room, what's been the best thing you've learnt so far today. We'll start down the front with you. Best thing you've learnt so far today.
careful of hackers.
Yep.
I thought, okay, maybe if I purchase a small cheap computer just to store Bitcoin on, and then it's not connected to the internet the whole time either.
Yep.
Yeah,
Yeah, because hackers can get into, just like they can hack bank accounts, they certainly can hack, and that's probably one of the areas of concern for people. So, yep. So don't have it left lying around on a computer connected to the internet, because that's just basically leaving your safe unlocked and the door to your house unlocked, and with a sign going, "Come here, here's my cash in my safe I didn't bother locking." It's just like anything, you'd be responsible with it. If you're responsible with it, it's not such an issue. Next, best thing for yourself?
Mine would be, earlier you said about not having an attachment to money.
Yeah.
Just kind of having that realisation, how much that we do get attached to things.
Yeah.
And then if we let that go, then our emotional sort of internal regulator doesn't go overdrive in
Yeah.
making the decision. So I think that will help me.
Yeah, definitely. It's important, and a lot of people relate to that, because we can make logic decisions, but as emotional human beings, that can override our logic, and then we start making very different decisions, especially from the fear of loss. If you look at and say, why do most people not become wealthy? If Bitcoin can go from 1,000 to 100,000, that's a massive potential for gain. Just like it's gone from, 1 cent to 10 cents to $1 to $10 to $100 to $1,000 already. There's been massive potential gain. Humans are more make decisions based on pain and pleasure. Humans are more afraid to lose money than they are to gain money. Therefore, even though it can have that potential to go from 1,000 to 100,000, and we see massive potential in that, human psychology is most people would rather avoid that $1,000 chance of going to zero, even though that's only 1,000 difference. They're more likely to want to avoid that than 1,000 going to 100,000. So therefore, most people won't because of that fear of loss. So be emotionally attached to something. That's why if you say up front, well, if I'm speculating and I can handle losing it, the money I put in, then I have no emotional attached to it, then you can make more logical decisions. It's not that you want to lose money, but you're less likely to lose money when you accept the reality of things, then, because you don't control what's going to happen to the price of Bitcoin. And if you're watching and you're praying at night hoping it goes up, and other people praying in hopes it goes down, you've already lost the game, because now you're emotionally involved in something. Warren Buffett's never like that. He doesn't. In the credit crisis, he didn't panic. He went in and bought the banks that no one else wanted to touch because they're afraid they're going to collapse. He went in and bought them. He bought them smartly. He said, "I'll give you X amount of money. I want set interest return plus equity." So he could dictate the terms. He made a lot of money out of investing in bailing out the banks. And he missed the call about Lehman Brothers. They don't leave a voicemail with Warren Buffett, and that's they try to get Warren Buffett. If he had bailed out Lehman Brothers, then the credit crisis mightn't have happened. But they couldn't reach him at that time, or the call was missing, and as a result of that led to the credit crisis. It could have been avoided. Best thing?
Yeah, for me it was a combination, just the different whys, and obviously the hedge. We mentioned the hedge, and obviously not only maybe trading it, but also the buy and hold, and the baby bucket principle, that sort of thing.
Yeah.
All that, and just your analysis of the history, and then your fundamental sort of thoughts on the future, which that was great.
Yeah, no problem. That's great. Miss New Zealand?
Just everybody's take on what they think
Yeah.
might happen, what you might think might happen, your highest and your
Yeah.
lowest, and what your average thoughts on it were.
Yeah.
Which is basically why I came along, was because the group that I went to last week in New Zealand, all they could talk about was mining bitcoins.
Yeah.
And they really didn't know anything about them.
Yeah. Yeah, and that's sort of the horses bolted for a lot of people for that now. And it's great if you can get Bitcoins effectively get them for free, or apart from the energy costs to get it. But then the real money now is made in either doing what Patrick's talking about, trading, or the still potential buy and hold if we believe it has a long-term future. So, yeah, over here, best thing.
Candlestick patterns.
Yep.
How to spot cleanse and reversal.
Yep.
Yeah, basically that's it. Yeah.
Yeah. Well, the great thing is a lot of the share trading principles for traders can be adopted straight across to Bitcoin. It's more volatile, so for traders, they like that, the volatility. And it's a liquid market still. Maybe not as smooth as far as the other markets, as far as the quickness in and out of exchanges, but that will evolve as more and more people come into the market. Best thing?
Well, it was more reassurance that I got.
Yep.
I sort of had a few ideas myself, and most of them were, well, I got the reassurance and like,
Yeah.
they're sort of that kind of thing. But I found it interesting about China.
Yep.
I don't see it as a bad thing at all.
Yeah.
I see it as a good thing.
Mm.
Slowing everything down. There may be a few different reasons why, but it wouldn't be surprise me at all if China's going, let's mine it ourselves, let's try to slow it down, let's get a whole bunch of powerful computers, a whole bunch of us guys to link together, you know.
Yeah.
Slowing it down is it's a good thing, you know. So,
Yeah. Yeah, as I said, if China wanted to kill Bitcoin, they would have done it by now. Their goal has not been to kill it. Their goal is obviously you want to try and control it a little bit and not let it be a runaway train. And I think the only reason they're posing some regulations is because of the money laundering and Chinese trying to get their yuan converted to Bitcoin and get their money the hell out of the country. But they're doing that regulation on dollars and on property and everything else. So I don't think it should be misinterpreted that they're picking on Bitcoin. They're doing it across the board. So, and they haven't shut it down. And also they're smart because you've got to be careful, and governments realize that if you go and be heavy-handed, you can incite a revolution and make Bitcoin become massive because people just go, we don't like governments, we don't like banks, and we're going to go and put our money in Bitcoin. So, you know, there is a lot of movements of people that will support something like that. So they have to be, you have to be balanced because there is that rebellious spirit amongst humans. That anti-government, anti-banking spirit is very alive and well in the Bitcoin industry, and that's important to understand that because that's a driving force behind it as well. It's more than just, you know, buying lotto tickets and hoping to speculate to make money. It's actually, there's disruptive technology there, there's a potential revolution, there's a change in the monetary system, there's value for merchants to trade, you know, buy things for no commission, instant clearing, no freezing of accounts. So there's a lot of intrinsic benefits of Bitcoin, and it is limited. May be volatile, but they have created a scarce amount of it.
Yeah. Also, it was 2 years ago, I heard an interview with one of the major guys in Apple.
Yep.
And they said they weren't putting most of their research into the new iPhone. They were developing something called the iWallet a few years ago. And I'm thinking, right now, we're held back a little bit by the hardware or it's not that easy to transfer coins right now. It's a little bit confusing.
Yeah.
So once the technology is a little bit more user-friendly, I reckon it's just going to go crazy.
Yeah.
Yeah.
Yeah, and I think there can be big players that could move into the industry as well. I mean, Facebook is in a perfect position to create its own currency. They do it to have it to some degree, but there's no reason Facebook couldn't add on to everyone's Facebook account your e-wallet and you trade in Facebook credits. There's already an economy for that. So, you know, some of these bigger players, JP Morgan has patented one recently in the last few weeks on digital currency. So there's opportunity there. So it is a massively growing industry, a lot of excitement about it. And I think the one thing we can guarantee is that we're going to hear a lot more about Bitcoin. It's just that you guys have an advanced knowledge than a lot of people. And there'll be increasing demand of people wanting to know the things that we're talking about here today. And that's why we obviously filmed it, so people can get access to a little bit more than just, you know, how do you mine it, you know, and that sort of stuff. So that's good. Any other questions? We'll take some questions and then we'll wrap up.
Just one hypothetical. So say we all go out and buy $10,000 worth of Bitcoin, and a few months' time it goes to 100,000.
Yep.
As Patrick said, you know, there's that low liquidity. You know, we all want to sort of sell too. So in that sort of scenario, I mean, what would, you know, someone like you do in that scenario? Would you be sort of, if it say, you know, it went from $1,000 an hour, 700 to 100,000, it'd be a good problem to have. But, you know, would there be a bit of knowledge in selling portions too. I mean, you wouldn't want to just dump all that lot of Bitcoin on the market.
Yeah, and I think the reality is the time the market ever grew to that size, it'd be a $1 trillion market, to get to 100,000 per Bitcoin. So it becomes 100 times bigger than the current market is. So there'd be massive increased liquidity, and you're always going to have people, some buying, some selling, some keeping. But what you would do is it'd be up to you, but you'd stagger out. You sell some as it goes up, and letting the rest run. That would be up to you, But a lot of people cash out too early, so that's why you cash out some, and then cash out more. Just why you enter in staggered way, you exit in staggered way, and that's all you can do, and that's going to be up to every time it gets to a certain viewpoint. Now, if it gets to something changes in Bitcoin, we'll come out and say, well, because of this, and this, our viewpoint now in Bitcoin is that. And obviously, if you're on it's 21st Century News, or if you're on some of our databases, then obviously you'll see what our viewpoints are, or you're following me on my Facebook, you'll see what I will say. So it can give you an indication on where we see the market, because things can change and go, no, we now have a different opinion. We believe this is what's going to happen.
Just one last one. I'm still just slightly hazy on the concept of the wallets, and I've read some of the emails that come through about how to set up a wallet, and is there a wallet you can have actually saved on your hard drive as opposed to having on the website? I mean, what's your sort of recommendation? I mean, I took on board have multiple wallets.
Yep.
Just to reduce
your risk, yeah.
Overall risk. I thought I read somewhere where you might have a backup of one of your e-wallets on it, like a thumb drive or something like that. I mean,
yeah, I'm probably not the best person to ask the technical questions to, because I have other people do that for me. But if you haven't opened an e-wallet yet, you'll see the process. There's a link on there, or go to our site and just click on the link. And there's different companies that do the e-wallet. So you can certainly open them up, obviously there. So the shortest way to get to our exchange is BXE, as go bxe.com.au. But you can certainly open all that up on there and read all of that. But there is a lot of e-wallets. The idea of having more than one is obviously if you just got a small amount invested, you're not going to worry about that. But as you build your portfolio, you're going to segment it in opening, having more than one bank account, basically. And that's all an e-wallet is an electronic bank account. Right. And all the currencies. So really, do you ever, in most of the money you have in your bank accounts, like if you take a loan on a house or whatever, do you ever, when you get a home loan, they don't give you the $500,000 in cash, do they? You never see it. It's just an electronic code, digits in your bank account. And what's your bank account? It's just an electronic wallet, effectively, true? So all a Bitcoin is an electronic, you use an e-wallet with a code. It's pretty much the same. It's digital currency. Yep.
Yeah, I started downloading that one particular one, and I'm still downloading all those transaction blocks.
Yeah.
So I'm on the right track then. Okay.
Yeah. So yeah, some of those things, the best way to learn is just open up an account and then you know how it works. So. Any other questions? Very good. Well, I wish you the best in your Bitcoin career, whether it's just a hedge in case. There's a lot of people in the world today be going, even bigger companies. There was an analyst that come out and said, Bitcoin is speculative, of course, and risky. You should put no more than 1% of your portfolio in it. Now, as more and more analysts say this, put no more than 1% of your portfolio, the flip side is that going, well, if a lot of people put 1% of their portfolio into Bitcoin, you can see how the 10 billion market cap could go to 100 billion and, as much as possibly $1 trillion in the future, because there's a lot of 1% of a lot of portfolios is a lot of money. And there's a lot of big companies and big funds, etc., that have to go, hang on a minute, just in case Bitcoin does take off, we should have some just in case. So that's hedging. Buy and hold. If you're a firm believer in its future, you're buying to hold. I'm a buy and holder and a hedger. And also the last aspect is trading. As Patrick talked about, I'm also trading. So I'm giving Patrick funds to trade on. And because I don't have the time to do all that, but someone's watching the market and get in and out. And of course, if you want to use the exchange for trading as well, with our exchange, it's more of a boutique advisory broking exchange in the sense you can go and get cheaper rates overseas. And the big exchanges, we're not going to get any advice with it, etc. Where you're saying with a stockbroker, you can go to CommSec and pay virtually no rates to buy stock, or you can use a broking house that's going to give you updates and information so they can give you more idea when you should be getting in and out, etc. And and that's it. Or of course you can go mining, or if you're a merchant or looking at doing internet business, then consider accepting Bitcoin. It's that in the future will become much bigger. At the moment, not enough people have Bitcoins, so there's not as many transactions. But certainly for the way of doing internet businesses in the future, a lot of transactions will be via Bitcoin, and there's a great opportunity to get Bitcoins by selling a product online, and that's what we do. You can buy any 20th century education course with Bitcoin. You can buy US property at the moment with Bitcoin, and no doubt you can make political donations to 21st Century Australia political party with Bitcoin. We're the first, ourselves and WikiLeaks are the first two political parties in Australia, and in America it's becoming quite widespread. Political parties collecting money in Bitcoin. So it is spreading around. It's becoming more accepted. As we mentioned before, Richard Branson, Virgin Galactic is also as well. So great chatting to you today. Hope you've enjoyed that. We'll let you know. We are planning, we'll let you know as far as the Global Australian Bitcoin Conference is being planned for the end of March. We'll confirm that. You'll be able to purchase tickets to that. And we are in negotiations to have the Winklevoss twins to come to that. Also Bobby Lee, we spoke to last week, the head of the BTC, the largest exchange, and a few other speakers to come to that. So that might be something of interest to you, and we'll keep you updated about that. Very good.